right, good afternoon, traders. This is your free video update from Seasonal Swing Trader. Today is Thursday, December 13th, 2018. Hope everybody's having a great week. And today we're going to take a look at probably one of the more reliable seasonal patterns across all of the markets. It's also probably one of the more well-recognized trades, and that is the so-called Christmas or the Santa Claus rally going into the new year. And in fact, we are right at that date today. Today is December 13th, and the seasonal trade that we are talking about calls for going long right around this time period, mid-December, for anywhere from 12/11 to about 12/15 or so, and carry that long trade into the new year. It's worked an astonishing 15 out of the last 15 years, and that is holding the trade from around mid-December right to the end of the year into early January. And actually, the trade has been positive 94 out of the past 118 years. So that is a lot of data, a lot of power in that seasonal strength, winning 94 out of the past 118 years. Well, what is the average move, you ask? It has averaged around it has averaged slightly over 2 percentage points in just approximately 15 to 20 days, with an average annualized return of 45.5%. So put that into perspective, the rest of the time the annualized gain of the Dow amounted to only 3.25%. So in essence, the Christmas rally or the Santa Claus rally is simply too powerful to be ignored. Now, with that being said, it is not 100% bulletproof. Prices can decline. Even this is a traditionally positive environment especially when we are in a rising interest rate environment, tariff and trade disputes between the U.S. and China, and other things that we cannot control. Important areas to look at on the charts here. This is a daily chart of the S&P. We've come back and retested this in recent days. This is some serious long-term support down here at the 2560 level. If we flip over to the NASDAQ, we've also tagged that support. We do have a little bit more room to go. We look over at the Russell, we'll look at IWM, the Russell ETF. Drew some support going way back, and this analysis shows me that there is potential further room to be had to the downside. Now, the Russell can be a leader in the overall broader market index movement, so this is one to certainly pay attention to. It has been the weakest and led the decline, and it looks like there is potential room to go down other areas to come explore to the downside before we look for a possible bounce. The market's been very volatile lately, so be cautious on any long trades. We are eyeballing another very bullish setup, and that is the 1, 2, 3 pattern as indicated by the 3S code on the chart. Notice that we are printing a new 1, 2, 3 bottom. This is based on 126 bars of look back. The higher probability trade would be 252 bars or a new 52-week low. So that would have to take out the February 6th, February 7th lows of this year. So we would need to break the 25-25 level to get a new, fresh 1, 2, 3 bottom setup. But all things aside, we have very high probability seasonal trade going into the end of the year, and that's to the long side. But always make sure your technical setups confirm the pattern before blindly going long. Hope it helps. See you on the next update.
Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.